Hello, chart watchers and DecisionPoint faithful. Welcome to this Monday, September 27th, 2021 episode of DecisionPoint. I'm here with my father, Carl Swenlin. My name is Erin Swenlin, and we want to get you prepared for this week's market action. So we've got lots to talk about. How's everything going for you, Dad?
Pretty good. Wondering why I'm not in natural gas.
Yes, me too. Well, speaking of which, let's go over our agenda items. First, Carl's going to do the SPY and indicator overview, give you an idea of what we're looking at as far as the market in general and our indicators, as well as the big four, we call them: dollar, gold, oil, and bonds. Then we had two intermediate term trend model signal changes for energy and utilities. We'll talk a little bit more about that. Nat gas, like we were saying, we've got to look at natural gas. Today it was up over 12%, UNG was, so we definitely want to take a look at that chart. Can it move higher? We'll have to look. And then I want to talk a little bit about XLF breaking out. This was our sector to watch on Friday, and it's looking pretty good moving forward. We'll take a look under the hood at those indicators for the financials and go from there. All right, so first I'm going to let you know that I do a free trading room on Mondays from noon to 1 p.m. Eastern. It is free, as it says, and all you need to do is go to our homepage. You will find an area where you can sign up for our free newsletter. That will get you the recordings. And if you want to sign up directly for the Zoom meeting, there is a link. It looks very similar to this with my picture. Just click on that and it'll get you right on into a registration for that trading room. So we did talk about, we had some shakeup on our DecisionPoint sector scoreboard. We found XLE, which has been doing quite well, breaking out with crude oil moving higher. And that took the neutral signal away, and we got a silver cross. That 20-day EMA moved above the 50-day EMA. On the flip side, XLU lost its silver cross and now is holding an intermediate term trend model neutral signal. And we'll talk a little bit more about that when we look at those two sectors. But let's go ahead and get a look at some of those charts. I'm going to pass the baton to you, Dad.
Okay. There we go. This is the SPY. You see that after the breakdown last week, it's recovered nicely back above this rising trend line, but it can't get above this declining tops line. And it could possibly squeeze one more day into this apex here, but it's gonna have to go one way or the other. I guess three ways. It could go sideways another day, which wouldn't prove anything for us. But right now, I'm looking for it to break upward. And I'll explain why that is later. There's the advanced decline lines. This is essentially the one of the oldest breadth indicators there is. This is our advanced decline volume line. This is for the S&P 500. And notice it's a negative divergence on this. So volume has not supported this advance, which is troublesome. New highs doesn't look like they got above the highest level of last week. New lows are expanding somewhat, not hardly as slow you should notice, but stay tuned for that. Our silver cross indexes for the S&P 1500 indexes, the 500, it's clicked a little lower today. the mid caps and the small caps ticked up today. So that's good. It looks like a huge up move in the thumbnail here, but the in context, the long term is not very much of a bounce. Looking at the weekly SPY chart, it broke down last week and it had a bounce this week. We're right up against this line. With this below its signal line and falling, that's the weekly PMO. It's not a good picture. Climax assessment, no climax today. Going back a little bit and just regurgitating what we have seen recently on this price low, it was a downside exhaustion climax. The next day, basically held in place with a little bias to the upside. And finally, on Thursday, I'm sorry, that was on Wednesday, we had an upside initiation climax. When you see that, you expect it to follow through to the upside, which it did the following day. But it was a climax day, so we have to assume that it was not an initiation, but an exhaustion climax. Doesn't mean if the whole move is exhausted. It just means that for the present in the short term, it's probably not going to go very much further for a little bit. So it basically is held in place for the last 2 trading days. And again, as I said, there is no climax today. Short-term indicators. This is a nice pop, but it's now this the STOV is getting oversold based on all these.
Overbought, yeah.
I'm sorry, overbought, and still no problem on the breadth side of that. Notice that I'm bullish about this week because this, certainly I was more bullish on Friday than today, but it's you can see it's coming off a very oversold reading for the percent of PMOs rising and the percent above the 20 EMA. So we might have a little bit more to go on the upside based on that chart. The ITBM and ITVM, they got pretty oversold last week, and I guess you wouldn't say it's hugely when you compare it to that bear market low there, but as of late, it's pretty oversold, and we're getting a bounce out of that. Let's look at the PMO. I didn't look at it earlier. Okay, it had turned up on Friday, and it turned back down today. So that's turning down below the signal line. That's not a particularly good sign, but it's not a very vicious down move there either, is it?
Looks pretty indecisive.
Yeah. Bitcoin is still struggling right around this level of support and resistance. It stayed above it today. We have another rounded top, similar to what we had here, only on a smaller scale, and potential for it to go back down and test this this level, 30,000 level.
Yeah, it lost its silver cross today.
Yes, it did. Yeah. And the 10-year. 10-year has done very well in the last 3 days, 3 trading days. Trading in the closing in the bottom half of today's range, but not at the low, so it's not quite a shooting star, which would be bearish. I would still expect it to move back towards this level of support, which it took 5 times to break above it. Gold, not doing very much of anything. I'm kind of holding on this area of support here. If me personally, before I want to get back in the gold, I would be looking at this PMO to turn up anyway, at the very least. I'm going to do that. Oil, moving higher, and let's just take a look at the weekly chart. That's behaving strangely there. Okay, here's the weekly chart. It's breaking out above that level, which we saw on the previous chart. And here's the first really obvious line of resistance right at the bottom of this gap. Fundamental, I can't see why this isn't going to go a lot higher. And, I won't give a target, but I don't think this gap is going to stop it. Long bonds had a nice break above the declining tops line of this triangle here. That was bullish, and then it broke back down, and it's below the bottom of the triangle. So bonds not looking so good, probably. And of course, yields are going to go up. And I think if I go any further, I'm going to be stealing your thunder. So.
Oh, no, go ahead. I see you have XLE and XLU up there. We can talk about them together.
Okay. Energy has been looking really good for the last 5, 6 trading days here. And I really think the sky's the limit on it. We've got a nice reverse head and shoulders here. The
neckline, yeah, it's
the neckline, yeah, is right through here. It's broken above it. It's about reached its minimum upside potential based on the measuring from the neckline to this the top of the head. But I don't think it's going to be stopping. You notice we're getting bullish percent is getting up there. Silver cross still quite low in the range. Stocks above their 20. That means the stocks within this sector that's 100% above their 20. But you can see that can hold there for quite some time. Same with the 50. And we're getting pretty overbought. But again, I just can't see what's going to stop energy at this point.
Well, yeah, that bullish bias is so very strong when you compare that percentage of the Silver Cross Index to 100% of stocks being above their 20. More than likely,
right.
That's going to continue to increase.
Absolutely. Today, and energy, we did get a crossover today of the 20 going above the 50 EMA. You can't see it very well there, but over here you can see it quite clearly. And in this correction, the 50 never did get close to going below the 200. So it was just a nice little consolidation here. This looks like a head and shoulders here, but I wouldn't be counting on this turning into a right shoulder.
Looks way too positive. That silver cross was just kind of confirmation of what's going on, I'd say.
Right. And utilities. Today, the 20 dropped below the 50 on that. That's silver cross. And it's just headed lower. That would be higher energy costs, I suppose.
I don't know. It looks like that 200-day EMA. You know, a lot of people in the trading rooms, they throw these charts at me that look a lot like this, looking to, buy the dip, look for that bounce off of those EMAs. But when you look at the participation underneath the surface, volume pattern, I mean, goodness, it's been down most of the month. We've had lower prices on utilities. It just is PMO's negative now. I don't see anything here to tell me that we would be getting a bounce off of this level.
No, it's a little too early to pick the bottom because, well, as I say, energy costs for the utilities are going through the roof. So I don't see how that's going to work out for the utility companies. And everything's getting pretty oversold here, but again, it could stay there a while. When you have an indicator with a finite range, this goes from 0 to 100. Once you get to the bottom or the top, if whatever's pushing it in that direction continues, the technicals, it'll just stay at the top of the range or the bottom of the range, whichever, and could last quite a while. And there was one more you wanted to talk about, financials.
Yes, absolutely. This was my sector to watch on Friday. I really liked energy going into this week as well, but I tend to look for the brand new momentum coming in so we can maybe get in on a move a little bit earlier. And financials just had an amazing week last week. I was expecting them to fully have a breakout today. It's still a very high price right now on the breakout, but everything looks great. It looks like for sure we're going to get that breakout. And I'd expect higher prices. I mean, the bank stocks are going crazy, and usually higher yields and interest rates do help the financial sector. And you just looked at that yield chart. I mean, there just isn't much, bearish there. We really should be expecting higher rates, and that's just going to help this sector, I would say. But what do you think of the technicals underneath the surface there?
Nice, bouncing, the PMO bouncing off the zero line. Mid-range on most of these, and plenty of room to run to higher. The golden cross is right up there and has been for a long time, which tells you that there's never been a substantial amount of downside going on in this sector.
Yep, relative strength is looking impressive. And yeah, I love those positive crossovers on the PMO, the silver cross, the BPI. I mean, there's a lot going on here, and it all is bullish in my opinion. So do you have the natural gas chart, or should I pull that up?
I can get it up. Gotta get rid of something just came down and got in my way. Maybe you better take it.
Okay, let's go back over here. All right, so let's pull up UNG. I don't have an annotated chart right now. Oh, here we go. I had it up here. So let's start with the daily chart. This is actually the weekly, but I'm going to move us into a daily chart. Yeah. Clearly huge move on UNG. And, I was eyeing it on this bounce off the 20-day EMA, and I'm just kicking myself that I did not get involved in it at that point. Usually both of us watch this chart pretty closely, and, it run away from us here. And so I kind of wasn't paying that close of attention to it. And, now we got that big move back, the bounce off the 20. I mean, it still looks great. You do have that breakout, But man, you get an RSI this overbought. Of course, it can get even more overbought. Overbought PMO. I mean, all of these things are a little worrisome. I have added stochastics to my chart, and the stochastics still look fantastic for UNG. So there is some upside potential, but you know, I was looking at the weekly chart. I'm trying to figure out, okay, well, where might it run into some issues? And really the closest I could find would be these two tops and these lows. And if you go just up to those two tops, that's still a 15.5% gain available to UNG, even after this run up. It's very parabolic, and we do talk about those a lot of times. What are you thinking about this weekly chart?
Well, you know, I don't think that the next level of resistance is going to mean anything. We're headed into winter, you know, and natural gas bills are going up. My gas bill for this house was $10 last month. But it's going to be like 15 times that by December. You know, it's going to start moving up now. So there's going to be a lot of demand on the natural gas.
So there's still that possibility. And, you know, like I was saying, I mean, that's the next area. These are the next areas I can see for overhead resistance. But as you said, I mean, I think there is some more upside. The question is, how do you enter at this point when you've got a big gap up to the point where we had this 12.33% move to the upside? I know personally, when I see these kinds of charts with these, you know, runners, if you will, typically we are going to see a little bit of a pullback here. I mean, that's what I would expect as a possible entry, but man, that's
yeah, I think you just missed the pullback.
Yeah, exactly. It's right back here. So yeah, it'll be interesting to see if it can make the, you know, continue on higher. If you did get involved in it, you know, definitely consider a stop, but I don't think you need to worry about a stop till you start getting into this gap area. But even then, it does look very, very positive right now for natural gas. One of the vehicles, and not that I would necessarily pick it or recommend it, but getting in late on a move, the ultra natural gas ETF could afford you some opportunity to really cash in on any move to the upside, since you've missed a lot of it here, that at least with that double, you could, you know, conceivably get a little bit more out of whatever we see going to the upside. But just always be careful with these juiced ETFs, as I call them, and Tom Bowley used to call them. Those juiced ETFs can be a little bit, you know, wacky, and because obviously you're going to enjoy a nice move to the upside, but if it does pull back, you really get hit pretty hard when you're in a juiced ETF. All right, I didn't actually have a diamond of the week picked out, but what I can tell you is if we go to my PMO scan, and this is available, this particular scan, the rest of my scans are only used for my DecisionPoint Diamonds reports, but we can just run this scan and see kind of where we're seeing some of the movement to the upside. So there's 44 scan results, which is very high for that scan. But what I'm going to do is put it in my scan dump. This is actually a chart list that I use that is completely transitory. Whenever I put anything in there, I know that it's not going to be saved. So if I want to save something, I have to move it out of there. But looking at a candle glance of these, and you can see some of these amazing moves that we had, the Diamond PMO scan tries to come in and get you some new momentum. Like you can see here with Bath and Body, which actually was a diamond last week. And looking through these, you know, that looks very interesting to me, the agricultural fund. I've heard a lot of news that might not be the place to be investing, but, you know, right now I just looked at that chart, and this double bottom is what really poked out at me. There's a brand new silver cross. 5-day EMA is even with the 20-day EMA, but that would be a short-term trend model buy if we were to see that. But getting that move here to break the confirmation line and move higher. And if you do the height of this pattern, it really would get you fairly close to this area of overhead resistance on DBA, which is the agricultural fund. But you can see stochastics look good. You have rising relative strength against the S&P. And we also have a PMO that's turning up here in oversold territory. So I think that one looks rather interesting. Are there any that are popping out at you on this list?
Oh, if you go to the ETF tracker list, you might want to look at the energy stocks within that list.
So, make sure that I got the sector in there so we can see some of these. So energy, we're looking at, there's XLE, which we've already looked at.
Yeah.
And actually, if I do
okay,
this,
oil and gas. And,
there we go.
there you go. Okay. Yeah, that was a good way to find them.
Yeah.
Look at them.
They all went up pretty high today.
Right. That was, yeah. So that's, looks like it's breaking out.
Right, excellent. And these, the ETF tracker is available in our chart list. We do have them available for our subscribers as well by request. But yeah, this is looking great. Nice breakout for IEO. The other would be oil services. Also had a fantastic day, a nice breakout. And there's, you can see that reverse head and shoulders setup like we were looking at on the crude oil chart. Looks very nice on XLE as well. We saw the same kind of setup here. Nice breakout above that confirmation line. And the height of this pattern would give us a move probably right up to this resistance level at these two tops, but certainly there's much more upside potential. And just if we got up there, that's still an almost 11% move just before we hit some, you know, realistic, I guess, overhead resistance. But truly the real overhead resistance comes up here. And I think these charts look fantastic as far as the ETFs go. And I know there was another one that was a very popular one in the trading room this morning, which was the oil and gas production ETF XOP, the spider. And again, reverse head and shoulders, beautiful move to the upside, almost breaking out above overhead resistance. I mean, when you look at a chart like this and you compare it also to XES, you know that we're going to probably see more upside potential here. It looks really healthy, PMO moving above that zero line, and you can see the bottom above the signal line, which is also especially bullish. But that really is about all the time we do have. Any parting thoughts for our viewers today?
I guess not.
Keep your head down, as always. Be sure and set some stops. While this looks great, just be aware that, you know, the market does look like it's going to churn a little bit more moving forward. But these are the areas that we would really concentrate on, which would be the energy sector and a lot of those energy ETFs. That's all we have for you today. Want to wish you a happy trading and a good week.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.